probably need to add myself into this thing, right? There you go. How's it going, guys? Sorry this one's running late today, but I really wanted to try and digest what was going on in the market here. We've had major news here this week, and the price has just not been reacting the way that you might expect it to. So I wanted to see if I could dive in and figure out why. And I think I've got at least some points that are plausible that you guys might find interesting. So without further ado, let's just go ahead and climb into that. And to do that, let's go ahead and first just briefly talk about what the news was. Obviously, everybody knows at this point. If you don't, if you haven't heard, I guess maybe you've been under a rock. But yesterday in the afternoon, the SEC did finally approve the ETH ETF applications. I think they approved 8 applications, whatever the number was. And so obviously that's a big move. That news came down Monday, really the indication that was going to happen. It was like really a complete reversal on the position that the SEC had for quite some time. Really nobody was expecting them to approve this time around. And then suddenly on Monday, they sent letters to the applicants and said, hey, we need you to make a revision on your forms and let's get those done expeditiously. And boom, that absolutely sent ETH off to the races. And let's go ahead and look at that chart while we're talking about it here. And I'll show you exactly what I think is shaping up for a big move, despite the fact that we're not seeing that big move happen at the moment. I think it's certainly shaping up the way that you would want to see it. So this is the weekly candle here, but it actually started on Monday from here, a retest of the 21-week moving average. That's the green one here. And just as a reference, this fib chart that you see here, all these fib lines are from the macro all-time high down to the swing low. And of course, we're now climbing out of this, and this has been a retrace through the 0.5 fib, the 618. We just broke through on this news, right? So Monday we saw what equated to a 19.5% candle here, and then followed up with another 3.5% or so, and things topped out here. This was like a total of a 29% move from here to here. So a little bit of pullback, no big deal. To see things validate in terms of a breakout, I really would want to see price climb above the 786 fib. That's just above the 4K level, and then we got a chance to go back after all-time highs and potentially into price discovery mode from there. In terms of a breakdown, I would be watching for a potential retest, and to be honest with you, a retest of this 618 would not be horrible. In fact, it would be a sign, if it holds, it would be a sign of strength. And of course, we have some pretty decent confluence here with the 100-day moving average kind of moving into that range. So a retest in this range would be very interesting to me. It would of course be a higher high. Even if we lost that, retesting down here at this 21, and it's about to cross the 50 moving average. As long as we get a higher low, I said higher high, but as long as we get a higher low, I think things are good. The most bullish scenario for me, in my opinion, and I am by no means an ETH specialist, most bullish scenario would be a retest of the 618, hold it, and then start climbing out here, climb past the 786, consolidate above, and then take off. That would be fantastic. Will it happen? Well, that remains to be seen, but it's not happening now. And the reason, one of many reasons I think it's not happening now, first of all, in terms of the ETH ETF, it's so funny how many, what you see online, so much speculation that, they're going to approve and they're going to start trading on Monday. Well, no, they're not going to start trading on Monday because Monday is a holiday and in the US and markets are closed. But beyond that, this was just one step in the approval process. So I think people are confused, thinking that it would be just like the Bitcoin ETF that they announced, and then boom, they were trading the next day. Not happening the same. There's still more paperwork. There's more administrative work to do here on this process. So it could be a matter of weeks, maybe potentially even months before it's all done. and whether they trickle those out in the order that they came in, or they wait till everybody has all of their paperwork done, all the due diligence is done, and then boom, they're listed and they go. So that's kind of a pending thing, right? We're waiting to see when those are actually going to hit the market, and I expect that we'll start getting some more news about that in the coming days. As for the FIT21 bill, another huge piece of news that actually came out on Wednesday. That was, in my opinion, the biggest news of the week. FIT21, for anybody not aware, is a bill that went to the U.S. House of Representatives that basically sets up a framework for crypto regulation, digital asset regulation here in the U.S. FIT21 stands for Financial Innovation and Technology for the 21st Century. It did clear the House of Representatives handily with bipartisan support, by the way. I think like 70 Democrats voted along with Republicans. We haven't seen much of that this year, so that's good to see for sure. But for this to become a law, it still needs to go to the Senate. And as far as I've seen so far, I don't even know that they've got a counterpart bill in the Senate yet. They need to have that bill presented, needs to make it to the legislative calendar, get voted on, pass that vote, and then it would go to the president's desk to be signed into law. That is another process that could take months. So the news is inherently bullish, fundamentally for the overall market, I think, because in both of these instances, they both mean potential for broader adoption. They mean, in terms of some of the major institutional money that has been sidelined waiting for regulatory clarity, that money could be coming into play once this makes it into law. And in terms of the ETH scenario, same thing. ETFs make it easy for a broader range, a larger number of investors, both retail and institutional, to get access to digital assets like Bitcoin and Ethereum. And it has been widely regarded by the SEC that Ethereum was a security. And by passing this yesterday, they are basically stating that, indirectly stating that it is indeed a commodity. Now, an ETF is a security, but the underlying ETH is a commodity, which is an interesting move. And I think that that's going to be debated. ETH has changed a little bit, or actually a lot, from time to time. Unlike Bitcoin, which has been resolved in what it was designed to do, and it has never changed. ETH is changing, and that could potentially jeopardize its future. I think that that's going to be debated with any other assets that come into the SEC's view of applying for an ETF application. But that's for another day. But obviously, there's already been some speculation that Solana would be the next one, and you just you have to wonder how any of these things would qualify based on their history. We'll let them work that out, and those are things that are going to be determined between now. If this FIT21 passes, a lot of this is going to go to the CFTC outside of the SEC's jurisdiction. So it's going to be interesting to see how that all works out. The other really, in my opinion, bullish part of the FIT21 is it means that the U.S. government is recognizing Bitcoin and potentially other digital assets, but certainly recognizing Bitcoin as a currency, and that it is not going to be banned. It's not going to be regulated out of existence in the U.S., right? That horse has left the barn. It ain't coming back. The genie has left the bottle. It isn't going back in. So those are all positive things, I think, fundamentally for the market. Now, again, why hasn't price just rocketed up on this information? And I saw some speculation that, maybe people are rotating out of Bitcoin into ETH. Well, that's plausible. That's logical, right? Only problem is that's not what's happening in the charts. So so that doesn't really wash. Like I said, I showed you that that ETH is on a decent trajectory, but it is not a trajectory that is that shows that people are leaving Bitcoin to get to ETH. In fact, again, we'll go back to the charts and look at what's happening here. There's the ETH chart, and let's look at the Bitcoin chart. Yeah, not so much. Bitcoin's actually having a better day, but you'll notice it's running into resistance right back at that 69K level, which we have talked about extensively on this feed. So, in fact, I think these things more than anything are mirroring what's happening in TradFi. Okay, so with that in mind, what is impacting TradFi? Well, I think the bigger issue here is another piece of news that came out this week that has fundamentally even more importance, apparently, to the market, and that is the FOMC minutes came out, I think, on Wednesday afternoon. And we rarely get anything that we don't know out of the FOMC minutes. Fed Chair Powell does a really good job of telegraphing what's going on, and for the most part, the media does a good job of pressing him for answers that we may not that may not he may not be revealing in his initial statements. But in the past, they have stated that they felt like rates were sufficiently restrictive, and I remember pointing this out specifically in Fed Chair Powell's last presentation after the FOMC meeting, where he said restrictive, but he didn't say sufficiently restrictive. And I just you have to read between the lines of the subtle nuances. So I felt like he's kind of positioning us for a potential. Potential change in their policy. And so, all of the fundamentals of what they're trying to do, they're trying to get down to a, 2% target. That is unchanged. But what has changed is that based on those FOMC minutes, part of what they're telling us is that more of those board members are also concerned about whether or not those rates are sufficiently restrictive, which means that number one, at the very least, less of a probability that we will see a rate cut at the next meeting. So not likely to see one anytime soon. High for longer, obviously still baked in. The question now that the market is asking is there a chance that they will actually hike rates again? Too soon to know. There's a lot of data points between now and the next meeting, and a lot of data points between that meeting and the one after that. So they'll continue to monitor. We got to see a downtrend. We have to see the things trending in the right direction to have any chance of rate cuts coming soon. And the things that we need to see are inflation coming down, unemployment going up, housing coming down, etc. So, we see different inflation metrics every week, and that gives you an idea of what's happening there. So back to the charts here. Let's look again. We looked at the ETH chart. Let's look at the Bitcoin chart and see what I think here's what I think are the targets that we need to be concerned about. Again, this 69K level has just been a real beast, right? Ever since we started interacting with it way back in March, beginning of March, we've just not been able to handily stand above it, right? There's been a wick on nearly every candle. Just very few have been wickless, but they've reverted, right? This one even had a trend precognition signal on it. Again, we had one here, and then boom, came back the next day, another solid candle, and then we started breaking down. So these wicks below are signs of weakness. A retest of support is called for. We've not seen a retest of this local low. We've not seen a retest of this breakout here. We've not seen a retest of support at this breakout here. Does it mean we have to have them? No, because, the market has not cooperated that way. Doesn't mean they might not eventually come. And so I personally save some dry powder for those eventualities or possibilities should they happen. But in the near term, you can see where all of the business is right here, consolidated into a pretty tight range here with three of the four key moving averages. The red is the 50, the green is the 21. That's the one I really like the most, especially on the weekly. And the 100 are all here between 64 and 65K. Our local low is at 56.5. So let's look in terms of liquidity and see where things look. Okay, so we also had in here this prior consolidation range of 58 to 60K. We have 65K, and we have our local low at 56.5. And of course, this is 50 to 52K, and this is top of this range is 44, 45K. So if we look at this in terms of liquidity on fire charts, let's refresh that and take a peek at what is the ranges that we want to re-examine and see if liquidity is concentrated around any of these ranges as well. Okay, so you can see we've had some decent movement here this morning, by the way, right? Things broke down yesterday, but we've had some movement here this morning, and this resistance was actually broken through. But my concern here is that support also is rather thin. Okay, so 65K we just looked at. There's less than 12 million in bids at 65K. And that ladders up a little bit here up to 66, but it's not heavy. It's really not heavy. You can see how heavy things are stacked up here as this ladder, these two blocks appeared here. We talked about these yesterday. They laddered down here. And so the heavy weight is up here above 72K. Really 71.5 is where things start getting thick. Even 71 is where it starts with the first 10 million in that ladder. To the downside, let's just kind of consolidate this a bit and see what it looks like here. On this weekly time frame, you can see 60K still has a little bit, about 15 million stacked at 60K, but it's pretty thin between here and there, right? So how much confidence do you have that this will hold? I have more confidence seeing the moving averages all consolidated there, but I sure would like to see a confluence in terms of bid liquidity in that range to give me more confidence in those moving averages holding. If not, then we go down to this 60K level, which we looked at that range of 58 to 60. There's really nothing in the 58 level, not much there. So 60K is really the last line of resistance here. Let's zoom out a bit on a monthly and see if we can get a better view of things here. You can see how things have thinned out below, right? And this has been kind of a combination of sentiment fading. Initially I thought, hey, sentiment's fading because they think we're going up. And then, of course, this rate hike, these FOMC minutes came out. But the fact that this is thinned out down here still means there's less sentiment. Some of this that thinned out just straight up disappeared. It's gone, which is not good. When it moves up, that's bullish. When it disappears, not so much. So what I have concern of is that this breaks down. When we look at this on the monthly time frame, we do see more liquidity up here in this range, spread between 65 and 66.5, which is good, with a little bit of secondary support here in the 63K level, and the lion's share here just above 60K. So those are really the strongest support areas. What you really want to see is more bid support. Brighter colors equal more volume here, right? So we want to see this really strengthening here, and it's just not happening at the moment. Perhaps once we get this FOMC news in the rearview mirror, these prices get baked in, then we will start to see more appreciation of price. But until we see more bid liquidity on this side, then we have ask liquidity above. In my opinion, it just becomes hard to break this level. So what does that mean in the near term and in the long term? In the long term, I'm as bullish as I've ever been, right? The fundamentals are only getting better for Bitcoin. And when the fundamentals get good for Bitcoin, they get better for the rest of the market. And this week, the fundamentals also got better for Ethereum. So those are inherently bullish, and those things do speak to a to the macro narrative, right? But timing is the other issue. When does it happen? When do we see the move? And it's hard to know. We could get it's hard to imagine better news than we've had this week, all of it stacked on top of each other. It's hard to imagine it getting better than that. Sure, it could happen. Maybe something unforeseen could happen and come our way. But yeah, like, I don't know, Walmart accepting Bitcoin, something like that. Maybe Jack Mallers wants to work on that. I've been watching him, and I commented on some. I'm going off script here, by the way, but well, since none of this is scripted, I guess it doesn't matter. But I mean, in terms of what my point was and what is in the written analysis, I saw somebody yesterday posted, Bitcoin can do this, this, and this. When can I pay my mortgage? When can I buy my groceries? When can I buy a car? When can I buy concert tickets? And Jack Mallers has a company, developed a company called Strike, and Strike allows you to make payments at any point of purchase terminal, using just his app and your Bitcoin. And those conversions are done seamlessly, so the retailer never has to interact with crypto, right? It's happening seamlessly on the back end, just like you would use a credit card or Apple Pay or something like that. But Jack spends all of his time talking about his mission and his conviction, which is great. I applaud that mission, but maybe he needs to spend more time explaining what his company does and what what that product does, and maybe getting it in front of major retailers who can help him expand adoption. And that would probably go a long way towards greater adoption, and greater adoption means better prices. So, and by better prices in that context, I mean prices going up. In the context of right now, better prices means, hey, if we can get a dip, we can buy at better prices. And I think that's what we are going to see. I think we're going to see an extended period of consolidation, or ranging at least. And to be honest, the consolidation has been so wide. I said this a few weeks ago, right? We're in such a huge range here that I don't even consider this consolidation, right? 56K, or what was it? 50, what's our low at? 56.5 up to what, 73,800. Okay, that's a 30% range. That's not a consolidation. That's huge. I want to see price consolidating in a 5 or 10% range. I think would be cool, right? So what does this look like? And I'm, really it's a $5,000 to $10,000 range. I think is reasonable. So maybe 5% is a little tight, but a $5,000 to $10,000 range seems like a reasonable consolidation range. Sometimes we see them narrow, like up here. This one is what? That's just 5%. This one down here is about I think it was like 12%. Okay. And up here we get to this 58 to 60 range. That is what? Just 2.5%. So yeah, a narrower range. This is just ranging. Consolidation to me is when things get more compressed. And that's when we see those big moves up, right? After some consolidation into a tighter range, and then a breakout, consolidation and breakout. This is ranging big time. And so in terms of upside potential, we still have this measured move here I showed you from the top of this this channel here. This let me try and get this out. Right. These downward slopes right here are really are bullish. And so if we got this breakout validated here, that measured move could take us up to 73K levels. And that's still possible as long as we hold above this structure. If we lose this structure, then we'll invalidate it. But it's still possible that we even, got a retest of support here or even down here. As long as we stay above this, then we could, and I guess I need to extend that now, right? Then it's still possible. Then we go after that 73K. Um, Time will tell. In the meantime, I think we have an extended period of ranging, and I'm looking for the deepest dips to buy. Simple as that. Hope that helps you guys out. If you have any questions, throw them in the chat real quick. Otherwise, I'm going to wrap this thing up, and as always, I'll stay in tune to what's going on. We'll be watching liquidity placement and liquidity movement on fire charts to see if we can get any additional clues of how things are going to play out. But for us to see that real macro breakout, we got to see some volume like we have down here, close to price, to push above these areas that have deeper liquidity to the upside. Until that happens, I think we just continue to range here, and well, hopefully that doesn't take the whole rest of the year to do. In the meantime, if you are trying to play along this weekend, watch out for those predatory killer whales. They have been out there and they have been on the hunt, right? Big short squeeze last week, and then they came in and punished some late longs, and we're just going to repeat that cycle over and over again. These darker areas of thin liquidity are areas that you can expect volatility. Liquidity dampens volatility, right? Means it's hard to get through this. Thin liquidity amplifies it, means it's easy to get through this. Keep that in mind. Maybe this weekend might be a good weekend to, get outside, go touch grass, spend some time doing the things you love with the people you love. That's what I'm going to do. Hey, Jay, if I'm pronouncing your name right, thanks for joining me. I appreciate the follow, and I appreciate the comment and the sentiment. Guys, with that, I'm going to wrap it, and looking forward to spending some time with my family this weekend. Hope you get to do the same. Have a fantastic weekend, and as always, trade safe, my friend.